Okay, so hello and welcome to another episode of the ICC Academy COVID-19 Briefing, an interactive video series where we explore economic and health implications of this coronavirus pandemic and what must be done to ensure successful recovery for businesses big and small. I'm your host, Thomas Paris, and in this episode, we'll discuss how banks are responding to the unprecedented disruptions caused by the pandemic and how ICC rules can be adapted to ensure the continuation of trade finance operations. So we have a full house of special guests today. First is David Meynell, Managing Director at TradeLC Advisory, Gary Collyer, Managing Director at Collyer Consulting, Krishnan Ramadurai, Global Head of Capital Management at HSBC, Ron Van Staten, Managing Director and In-House Counsel at ING, and our moderator for today is going to be Olivier, Director of Finance for Development at the ICC. These briefings will kick off a collaboration between the ICC, the United Nations, and the World Health Organization. During this session, we will start by running through a few topics, followed by an audience Q&A. And we've already collected some questions for the second half. So we invite everyone to send your new questions through the chat, and we'll go through them together at the very end. As I mentioned, this session is balancing a full house of speakers and over 1,000 audience members, so we ask for your patience and understanding if you run into any audio and video hiccups. The polished recording will be made available on YouTube very soon. So let's kick things off. Olivier, the floor is yours.
Okay, thank you very much, Thomas. Hello to everybody. It's a real pleasure to have the opportunity to discuss with you all about the recent, let's say, duties that the Banking Commission of ICC has undertaken those last days. So we are all aware that trade business, trade industry, and trade finance in particular is facing a very, very difficult period of time. And together with the Executive Committee of the Banking Commission, we thought that it would be very useful for the Banking Commission to react and to provide the market with some views from experts to provide some guidance in a way to allow the continuity of the business and to allow to have a playing field in that industry which would be acceptable for all parties. So this is why we have produced this guidance paper that will be the bulk of the discussion we will have today with my colleagues. I wanted to mention also two other papers that we have produced recently that are available on the ICC website. The first one is a letter that we have sent to central banks and to governments of all major countries to encourage the adoption of electronic documents. We are all aware that these days one of the big difficulties to obtain paper documents, and so we are pushing in that direction to make sure that all jurisdictions could consider some evolution allowing the acceptance of electronic documents rather than paper documents. We have seen already some example of, let's say, good move in that direction coming from Algeria a few days ago, and more recently from India, where the central banks of those countries have encouraged their commercial banks to accept electronic documents. So for India, it was dedicated to acceptance of e-bill of ladings. But this is a very, very strong move and a very important one, and we hope that it will be duplicated in many countries. The second document I wanted to mention is one document that we have released this morning, actually, so it's really, really recent. And it's not a guidance document, but it's more a document which is sharing best practices on how to move to digital. It's describing measures taken by major banks active in trade finance to adapt their ways to monitor transactions. So it goes from adoption of electronic signature up to, of course, acceptance of scanned documents, electronic documents. I encourage all of you to go on the ICC website to consult that document, which is, in my view, a very interesting one, which gives a good illustration of what is already performed by some banks in that respect. So, of course, I just wanted to be very clear on one point. Of course, these documents are not perfect. Maybe they will not answer to all the questions that you will have and that you will face in your real life on a day-to-day basis. So today, what we have done is to put together some guidance and some views coming from experts in that field. But those documents are not, and especially the guidance documents that we are going to discuss today, are not totally in the marble once for all. And if we consider, all of us, that it deserves to be adapted or to be updated in a different way, definitely this is what we will do. So for the presentation today, we will have 3 chapters of discussion. The first chapter will be dedicated to, let's say, a global presentation of the main features and the main highlights of the guidance document itself. The second chapter will be dedicated to answer to questions that we have already received. As you have seen in the registration form, you had the opportunity to answer to raise some questions. To raise some questions to the panelists. So thank you for that, because we received already a number of them, and we will elaborate on the answers that we can provide to those questions. I will explain a little bit later how we will proceed in that respect. And at the end of this discussion, if time allows it, we will have a free Q&A session through the chat system that you all know. So without waiting, we should go for the first chapter of the presentation. So I will give the floor to Dave Meynell, that will give a global overview of the guidance document that was released a couple of weeks ago now. Thank you, Dave. Up to you.
Thank you, Olivier, and welcome to everybody. It's a great pleasure to have the opportunity to present this paper to you. As you're aware, and Olivier's mentioned already, on Monday, the 6th of April, the ICC released 2 guidance publications. One was the one to governments and central banks, which he's already mentioned. And the second, which is the subject of this webinar, specifically addressed the impact of COVID on trade finance transactions issued subject to ICC rules. Now, this was issued in response to myriad of inquiries from all around the world on social media and within banks as to how should organisations react to the pandemic when handling trade transactions under ICC rules. And it came as no surprise to any of us that the most common question revolved around the issue of force majeure and whether or not this applied in these continually evolving circumstances. Now, I know I did, and many other practitioners did. We looked to find an answer in the 10-year-old ICC statement that was issued in response to the volcanic eruption in Iceland. And this did impact very severely on the impact of the delivery of documents all over the world. And the statement within that paper was, it must be noted that this is not an event that is covered by the force majeure rules of UCP 600, Article 36, URDG 458, as it was then, Article 13, and URC 522, Article 15. The concerned banks, guarantors and instructing parties are still open for business. It is the documents that are being delayed in transit to them. To a large degree, that's how it has been now in the existing situation. There's been slight changes here and there, but basically most banks have been generally open for business, maybe at reduced strength, maybe at reduced capacity, but the doors have been open. But as has been very prudently noted in the guideline, whether or not force majeure applies is ultimately dependent on the facts. It can only be decided by a court or a tribunal with jurisdiction or a government or regulatory authority. And should such a decision ever be made, it would be good practice that it should be communicated to all parties in the transaction according to whatever your applicable law is. But the key issue that must be highlighted is that it is not for the ICC to pronounce whether any particular set of occurrences or circumstances amounts to a force majeure event. And this will be covered again later on in the webinar. Other questions we received were surrounding the possibility of ICC rules being amended or modified. Now, we all know they can be modified. Each set of rules allows for that, even excluded if necessary. So in practice, it's quite possible to modify ICC rules, provided all the parties agree. This may prove to be quite useful in the coming weeks in circumstances where parties may wish to extend the 5 banking day business day examination period for documents, or maybe the 5 banking business day period in which a notice of refusal must be provided. But the thing you have to remember, if you use this solution, any modification or exclusion of an ICC rule may produce problems that you haven't thought about. So think about all the potential implications when you modify any articles of UCP. We have stressed in the paper, you may not even go to such a length. As it is now, as it was previously to the pandemic, the most simple answer can be dialogue between the parties concerned. Each party talk to each other. That can often help alleviate any problems and provide the relief needed. The paper goes on to outline potential alternative solutions that involve the use of electronic documents. And by electronic, it's quite wide-ranging. It includes scanned, faxed, or emailed images. And many banks have already put in place such solutions. And the ICC have collated many of these, and as Olivier mentioned, have now released a paper which you can download from the website. And I really recommend you do that. It's very, very useful. I think we all know that many of the problems would have been eased if we were not using paper. That's obvious. But at this moment, we are not still in a truly digital world. So the other approach that the ICC has taken is the opportunity to re-emphasize the importance of digitalization. And they will continue promoting a broader use of ICC e-rules, the EUCP version 2 and the EURC version 1. And will also be re-emphasizing the usefulness of UNCITRAL model laws on e-commerce, electronic transferable records, and electronic signatures. I think all of you need to talk to your organizations for the future that you refocus on the ICC e-rules. They haven't been used very heavily in the past. Perhaps these circumstances with the pandemic have reminded us that we need to move a bit faster into a digital world. And that again will be touched on later on in the webinar. So I finished that piece. I can now pass over to Gary to say a few words on different scenarios.
Okay. Let's say good afternoon, evening, and for some of you, even morning, looking at where you're all coming from. As David mentioned, I think one of the key points that should have been, I think, observed within the particular paper was the need for dialogue. And when we look at this, and when we started to look at the scenarios that currently existed regarding the delivery or non-delivery of documents, as it is turning out, one main feature came to the fore, which is basically, at the end of the day, the instructions regarding delivery of documents were part of the letter of credit, were an instruction that was given by the issuing bank, and that to a large degree, issuing banks should be playing a fairly proactive role in providing fresh instructions, whether it be for delivery of those documents to a location that was working, or whether it should be in relation to alternative solutions. And then Dave has already alluded to one that we included within the paper, and clearly there are others. But the fact remains that for most of these scenarios, even though we have outlined them, a lot of them would actually just disappear or go away. If we created the dialogue whereby the issuing banks were providing new instructions or basically bringing to the fore their business continuity plans, identifying different offices that could receive those documents, and arranging for the documents to be processed through those particular offices. What I want to do is, rather than just go through each of the 4 different sections of the scenarios part of the document, is really just to give you sort of the highlights or the flavor for each of the 4 different scenarios that we drafted in the document. The first relates to the interaction between a beneficiary and either the nominated bank, confirming bank, or the issuing bank if documents have to be presented directly. And one of the first points that we made in this particular document is that clearly all of this is outside the scope of the UCP. And this is even probably more relevant for either the nominated bank or the confirming bank to advise any of their beneficiaries of different locations where they may be able to offer a service, a different location for the delivery of those documents where the bank may be able to collect them and then manage for them to be processed at some location. And also, this doesn't absolve the beneficiary from actually checking before they come to present as to where those documents should be presented if they are aware that the local office is not operating or it's not operating as fully as it should be. And we went through a whole series of different scenarios, and I think what we need to look at in each of these is what happens today with the current transactions and what should happen in the future. And that's what each of these sections actually look at. We're trying to provide potential and positive kinds of instructions as to what could happen, how we can get these documents delivered, the ways in which banks can still operate, how banks can still manage the process of examination of documents, the honor and negotiation of those documents, and ultimately the delivery of the goods to their own clients. But the reality is, there are some flaws in the system at the moment with couriers either being able to collect but not deliver, or not being able to collect at all in any given circumstance. We've talked about in the paper the potential of future transactions as to using EUCP and using electronic documents rather than paper. Now, that may not all be possible for every single bank, for every single client that we have, that we operate on a daily basis. But we should be looking to promote that. We should be looking to move that forward in order that we can actively move the process that had really to a large degree commenced prior to COVID of a shift from paper to electronic. And recognizing that we need to do things slightly differently. We have to think out of the box. We can't continue with how we worked 3 months ago, 4 months ago, expecting documents to arrive on our desk in an orderly fashion, that we haven't got to worry about how they're delivered, and we will get a certain number of documents per day, and we can manage our business according to those criteria. That criteria has gone out the window. That's finished. We're now in a different world. We're now in a world where we need to manage our business. We need to manage how we process documentation. And we also need to look forward. We need to look forward as to how we're going to manage new transactions in the future. The paper made reference to modification of UCP rules. Now, that wasn't necessarily recommended within the paper, but it's certainly something that could be considered. The wording in the actual paper was given with a caution that any bank that did want to modify existing rules, i.e. 14B or 16D in relation to the 5 banking days, should really do so after they've taken professional advice as to the potential ramifications of taking such an action. But at the end of the day, we're in a situation whereby we need to look for new solutions. Part of what we're going to talk about later are part of those solutions. Dave has alluded to one. I think some of the questions that we've had tabled already identify that people have different ideas or similar ideas, and they want to know, how do we implement this? And we will be discussing those as we go through the questions a little bit later. But when we start talking about documents, it's all about how we can do things differently. If we look at new credits that are going to be issued, it may well be that we will see more credits that will have more than one nominated bank named. We included in the paper deliberately, we did not mention reference to LCs that are available with any bank, because we know there are a number of banks who are very cautious in that aspect because of potential regulatory issues relating to LCs which are available with any bank. What we did suggest was you could have an LC that's issued that's available with more than one nominated bank, giving the beneficiary an option. If one is closed, it would have an option of being able to present to a different location. The second area that we looked at was the interaction between a non-confirming nominated bank and the confirming bank and the issuing bank. And in that, we incorporated 6 different scenarios. And we had the same similar scenarios when we talked about the interaction between the confirming bank and the issuing bank. So I'm not going to go through both sections because both of them were fairly following each other in logic and in the way in which the action could be taken to rectify the position that was outlined in the heading. But we do have to recognize that there are issues, there are things that need to be resolved. We have, as I've mentioned, given a potential solution, which is the sending of documents by email or by scanned documents or fax documents through from a nominated bank or a confirming bank to an issuing bank. That is one way. There are other ways. There are other ways in which we can achieve what we want to in getting documents to the right place. Some people have questioned what is the viability of having scanned or emailed documents and what is the value of that. I think what we need to look at is that this paper, and I think when Dave and I first discussed, how maybe we should structure this, one of the things that became clear is that this doesn't remain a dormant document. This is almost an evolving document as things move in the pandemic. This is going to be enhanced. It's going to move into different subjects. It's going to move into different areas. And I think what are the issues today in how do I get documents delivered is paramount for, let's say, 3, 4, 5, 6 weeks down the line when suddenly these documents are available for delivery. What are you going to do as banks when suddenly 2 months, 3 months worth of documents that have been stored by a courier suddenly arrive on your doorstep? And how do you manage that process within the 5 banking days or the 5 business days for guarantees? That's going to be the next dilemma and the next issue that's going to have to be addressed. And that's why this document will forever evolve. And what happens in this document is really just simply an outline of what we believe are the issues that you should be addressing, how you can address them. Now, some people have raised questions, and there is one question actually on the application of Article 35, which appears in each of the scenarios that we've given for sections B and C. And I will give you a comprehensive, hopefully, answer to that when we get to that particular question a little bit later during the course of this webinar. When we start looking at the last section of this, which is the interaction between the issuing bank and the applicant, we have the issue of effectively the greatest relationship in all of this, because the letter of credit starts with the applicant and it finishes with the applicant. So therefore, they play a key part in what we can do as banks, what the beneficiary can do as a beneficiary under that transaction, and how the documents will look like and what can be done differently. And therefore, the interaction between that issuing bank and the applicant is critical to the whole of this process. And whatever dialogue happens between the issuing bank and the banks that are concerned really is reliant upon the applicant being brought along with demonstrating what the benefits are of moving to an alternate solution, the benefits of being able to potentially obtain their goods a little bit quicker than what maybe they could have done in the past, and the reality of how we bring a transaction to fruition. Because even though if documents are stopped halfway around the world, an applicant in a letter of credit is still ultimately and hopefully going to want to get hold of their goods. And the question that the banks have is, how do we manage that process to enable that to occur when the originals are not going to move? They're not going to move from country to country. They're effectively going to be lying in a courier warehouse or within a nominated bank or a confirming bank. For the other products that we covered documentary collections and guarantees. Now, clearly, as a collecting bank or a presenting bank, the first a bank would know of a collection is when those documents actually land on their desk. Now, in today's world, there's no guarantee that those documents will land on that desk. And therefore, it's now critical for there to be upfront exchange of information between remitting banks and prospective collecting and presenting banks to ensure, A, that documents can be delivered, and B, if they cannot, what alternate solutions exist for the principal and the drawee to bring that potential transaction to fruition. For guarantees, similar to what I mentioned in relation to the interaction between the beneficiary and a nominated bank, or confirming bank, or an issuing bank in Section A, we have the issue of how do beneficiaries present their demands under a guarantee, and are they able to present those demands within the time frame allowed within the particular guarantee. At the end of the day, similar to what we've said for nominated bank, confirming banks and issuing banks, the Articles 14B and 16D in relation to the 5 banking days remain. They haven't changed. That criteria is still there today for the transactions which are going to come their way. The same applies in relation to business days in respect of URDG 758. Again, if the demand cannot be presented in paper, and that is the requirement for that demand to be presented, then there needs to be an initiation of dialogue between the beneficiary, the guarantor, and the instructing party as to how that particular transaction can be brought to fruition. We talked about delayed payment in respect of letters of credit and guarantees. Now, people have asked the question about, can I claim interest if I can't get payment on time? That is not an issue for the rules. That is an issue which is outside the scope of UCP, outside of URDG, and will be something for the applicable law to deal with. Now, as I mentioned, we are going to cover some other things a little bit later on. I'll be covering the Article 35 question, and I'll also be looking at some of the alternative solutions. But in the meantime, I'll hand over to Ron to talk about some of the legal aspects of the paper.
Thank you, Gary. Yeah, please, Ron.
Welcome, everyone. I hope you can hear me well. Thanks, Gary and Olivier and Dave for the intro. So I'm trying to cover the legal aspects of this, which are, there are many aspects, the legal aspects to this, but I hope in the end you will realize that the legal aspects are probably not the most important ones in this whole situation. So looking at this from a legal point of view, we all these documents, trade finance instruments are typically abstract from the underlying trade, and there's a reason for it. Of course, banks aren't party to that underlying trade. We service the trades, but we're not a party to it. So for those trade finance instruments and banks to be able to process them and arrange payments and the like, there has to be a set of rules which is just between the banks and the processing of payments and papers. But in this case, if we think about the impact of this virus on trade finance, we have to realize as banks that we are services. We are providing a service and we are facilitating trade. And so when we look at the rules that apply and when we decide how we handle things in case we encounter issues like this, which are pretty unprecedented, I would say, we have to realize that there's an underlying trade and that as much as possible, we should do our utmost in the application of the rules and in our conduct and in our designing our business continuity plans to keep those going. Now, before I will deal with some of the questions in more detail later on, I just wanted to tell you a little bit about the issue of force majeure in relation to COVID-19. First of all, force majeure is a French term, as you will know, and the concept originally stems from, I think, French law, and we have to understand that internationally, it hasn't got one meaning. It has several meanings. It means something else in the common law countries, under English law and Australian and US, than it means in other sort of more civil law countries where often these concepts have been codified into law. We have to understand that what the ICC has done in their rules is basically provide a contractual solution for force majeure, or at least some rules around situations where there's force majeure. And that's a contractual thing. It's not, it doesn't come from any national law. It's a contractual agreement. The moment an LC is issued under UCP 600, that comes into play. And similar with the other sets of rules where there are references to force majeure like clauses. And when it comes to the main question of is COVID-19, does that create force majeure? As you can imagine, I will not be able to give you one answer. It'll, as good lawyers will typically tell you, in a perhaps boring way, but it is true. It depends on facts, circumstances, and of course on your clause, on the actual wording of your clause. Typically, force majeure requires an element of exceptionality. It doesn't have to be, the situation doesn't have to be unforeseeable per se, because a pandemic in itself, you could argue, is foreseeable, except that no one expected it to happen in this way, and not at this moment. And if you run your normal business, you don't necessarily cater for this kind of event, as it has been pretty unprecedented. So it has a degree of exceptionality to it, but it doesn't mean that parties can easily hide behind a force and then claim that that will get them off the hook, or that will basically make it impossible for them to perform their obligations. Typically, when it comes to force majeure and courts interpreting force majeure clauses, and also when force majeure concepts are codified in laws, the courts will look at typically what the party claiming force majeure has done to avoid or mitigate the circumstances, or what he has done in preparation to avoid those circumstances. So, for example, when it comes to closure of offices, I can imagine that if there's a very short and tight timeline when documents have already been sent to an address that were known and was open at the time that the documents were sent, there's little you can do, of course, because the documents are on the way. There's no about that. And when they then arrive, you haven't got any address where they can be delivered. That's a different situation compared to, for example, that the office is closed and you got the documents in your hand and you have to decide what you're going to do with them. And sending them and knowing that the office is closed might not be the best course of action. That's from the sender point of view. From the potential addressee point of view, when an office closes, certainly how banks are set up nowadays, they're meant to have business continuity plans for disasters, certain disasters. And now we have had this precedent. Definitely this kind of pandemic would have to be part of any business continuity plan if it wasn't already. But banks, their potential addressees are expected to come out and proactively inform parties that their office is closed. And ideally, alternative arrangements. That isn't just a question of sense or thing you would do to keep the underlying trade going. It is also something that would be legally relevant, because if you fail to do that, a court might be less sympathetic to your claim of that there was an event of force majeure and that you can't perform your obligations. So these are just some general pointers. Remember that in most cases, the burden of proof that there has been an event of force majeure is on the party claiming it. So they will have to give the evidence. And I'll come back to some of these things later on when we're dealing with the questions. But that is something that is the banks or anyone claiming force majeure will have to bear in mind. Generally speaking, sort of jumping ahead a little bit to the questions, but in my view, it will not be so easy, certainly not at this stage. Now we've sort of couple of months into this situation for anyone to claim as an addressee of documents, to claim force majeure in terms of, the office is closed and I can't do anything about it. There's always another office you can close, you can open, or another address you can give. And there's time and communication, means of communication to tell your other banks in the chain what the situation is and provide an alternative. Sitting on your hands, closing down the office and not doing anything, it will not be looked at favorably by any court that, if ever, we'll have to make a judgment on this. And as my colleagues will probably also highlight, the law is well, it's a useful tool. Certainly if things have gone wrong and you try to recoup money that was lost or find a remedy. But in these kind of situations where trade flows are going and some goods that could be perishable, lengthy legal disputes and legal wrangling between parties is hardly ever a solution. The best thing is to avoid them by using clear language and by being proactive and communicating, keeping the lines open, and avoid disputes and avoid situations where people lose out. It's not really a legal advice as such, but I'm an in-house counsel. I work for a bank, and my main task is to avoid these kind of disputes coming up. I don't make my money from the disputes, so we have every interest to make sure that these things are avoided. So that is my general intro on this. Okay. And now I'd like to pass on to Krishnan. Krishnan, I hope you can join us now, and I'll be coming back with more detail on the questions that were asked about force majeure. Thank you.
Okay. So maybe we can move to the question session. So as you have seen in the registration form, you had the opportunity to raise questions. So we received about 60 different questions that we choose to regroup into categories. So we will go through those categories in this slide. So 6 categories. So questions about force majeure, the Article 35, scanned and email documents, electronic documents, alternative solutions, and general outlook, business as usual. So I propose maybe that we start with the first set of questions. So I come back to you, Ron, on those questions about force majeure. Can you elaborate on, let's say, the best answers you can provide to our audience in that respect? Thank you.
Yes, certainly, Olivier. I mean, in the couple of minutes that I've got, as you can imagine, it will be impossible to give an answer to every question in relation to this. But I'll give it my best shot and give you as much detail and pointers as I could possibly do in this short period of time. So one of the questions that came up was, and that's, well, not one of them actually, there were quite a few on this topic, is what is the status of these different certificates and declarations that are issued in some countries by authorities, event or force majeure. Again, I have to speak generally because it could, of course, vary per jurisdiction and situation, but generally, the issue is that those declarations and certificates could only be part of the evidence that there has been a force majeure. They're not decisive. Neither is decisive the bank claiming force majeure, saying or notifying anyone else that there has been a force majeure event on their side. Again, that is not decisive. it is ultimately, as was pointed out in the guidance paper, up to the courts if it comes to a dispute. If not, then parties have to come and see if there's a way that they can resolve the situation between them. But ultimately, if they cannot, it's the courts that decides whether or not there's a force majeure event. There's no, generally, no decisive the certificates and declarations are not decisive.
Okay, fine.
Or determinative. The other thing that has been on some of the questions was the processing of documents in relation to force majeure, and I mentioned this earlier. Documents that are sent and are already on their way, when an office at the other end where the documents are meant to be delivered closes in the meantime, these situations are different, of course. That could amount to a force majeure event if it comes quickly, unexpectedly, and the bank in question has not been able to issue out any notices beforehand saying that they're closed. But the situation would be quite different, in my view, if there was the situation of this closure of this office had already been going on for some time, and there has been no communication to anyone in the chain about that fact, or no communication about any alternative arrangements. And as I said, it's sort of, it's from a practical point of view, you know, it makes total sense to do these things, but it is also legally very important if you want to protect yourself. Because I think knowing, certainly now this virus and this situation has been going on for some time, it won't be so easy to claim and hide behind the force majeure clause, whatever ICC specific rules you're working under. One of the other, the question that was mentioned was, let me just have a quick look. Yes. So, what is the meaning of reasonable, beyond reasonable control in this matter? And again, I'd have to repeat, reasonable control means exactly what these two words say. It means you have to at least be in a position to, or at least make attempts to avoid that you're out of control. Because if there is something you can do about the situation becoming a problem, typically you would expect it to do that. Certainly with the ICC, that's certainly the intention of the ICC rules and the way the ICC would like them to see, them interpreted.
Ron,
the underlying issue.
Ron, sorry
Yes.
to interrupt you, but I see the time is running very fast, actually. And can I ask the speakers to go a little bit more straight to the point? Otherwise, we will not have time to cover everything. So please, if you can do a small acceleration.
Yeah, as I said, that's I'll certainly do that. I'll try and wrap it up quickly. So the beyond the reasonable control has a meaning in relation to the efforts you're meant to be taking to avoid the nasty circumstances. One other question that has come up was how does this, whether the COVID-19 situation could actually lead to a party claiming that the contract that they've entered into is frustrated. Frustration as contract is an English law concept, but generally I would say that the scope of the number of situations where you have or can have frustration of contract are much smaller than generally for force majeure clauses. Typically, force majeure clauses, the scope of those clauses is wider than frustration. In other words, before you can claim that a contract is frustrated, threshold for that is much higher. It would really have to be impossible to perform, or the purpose of the agreement will have to become almost impossible, and so it becomes, the whole agreement becomes a bit of a a non-starter. That situation in relation to trade finance instruments and in relation to the COVID-19 situation, I can't see that happening very, very easily or very quickly. So it's something that you can't completely rule out, because there might be specific circumstances where it will be frustrated, but it won't be easy, and it's not an easy thing to rely on in this regard. I would to the audience one last thing. The clauses that we have are there to serve the underlying trade ultimately, and ideally that's how they should be interpreted, and that's how banks involved in the chain are expected to deal with them, and also deal with the documents as they are processed and as they are foundations under those trade finance instruments. So with that, I will hand over to the next speaker, Olivier, and that will be you to introduce the next person.
Okay. Thank you very much, Ron, for this explanation. So I will go to Gary to give us maybe your view on the Article 35, which is one of the most important one, and maybe the one on which there are some questions. Thank you, Gary.
Yeah, actually, we had one question, as you can see here. Was there any doubt that UCP 600 Article 35 is applicable and covers the nominated bank and confirming bank in all scenarios? What I wanted to do is give you a little bit of a potted history here, which may then give you the overall answer on what our plans are going forward. When we incorporated Article 35, or the references to Article 35 in the guidance paper, this was largely predicated on the comments we received from national committees that we needed to, for want of a better word, protect a nominated bank or a confirming bank that was unable to perform its function of sending the documents through no fault of its own, because the issuing bank had either not provided new instructions or was failing to respond to any request for new instructions, or to provide any alternative solution in relation to those particular documents. So from a technical and operational viewpoint, we do not believe there was any doubt at the outset. And I say this is what guided the content of the various scenarios. I've already mentioned in my opening remarks that the paper in a number of places places great emphasis on dialogue between the parties, and none more so than the issuing banks being fairly proactive in providing information regarding new delivery locations and being at the forefront of providing details of any alternate solution that they could work with. And I think, given that it is the issuing bank that has provided those mailing instructions that the banks cannot adhere to, it's fairly obvious that they should be responsible for providing the fresh instructions as soon as they become aware that those documents cannot be delivered. Because if anyone is going to be in a position to know that something cannot be delivered locally, it's going to be more the issuing bank than it would be the nominated bank or a confirming bank. And likewise, it would not be appropriate that issuing banks be allowed to not respond to pleas or requests from nominated banks or confirming banks for fresh instructions. Now, at the outset, I mentioned that the inclusion of Article 35 was predicated on a technical and operational viewpoint through the comments we received from national committees. Since the issuance of the paper, there has been no, shall I say, outcry or negative comments received by ICC from the industry. But I would add that in some legal quarters, comment has been made as to what could be described as the extending of the scope that is expressed in the first paragraph of Article 35. This has led to subsequent discussions that are ongoing as of even yesterday with the ICC Banking Commission Legal Committee as to whether courts in all jurisdictions would necessarily uphold such a position. And clearly we want to have a consistent approach and a consistent viewpoint that's going to be applied globally rather than one that is in one pocket of the world as opposed to another pocket. The comments that we have got from legal committee members has been that the position expressed is fair, but as I say, are we able through this particular paper to actually extend the scope, as I say, for want of a better word. I think as a drafting group, we would hope that it would not get to that stage, that there would be a legal dispute. But clearly, we have to consider the interests of all parties. And we are currently in the process of a number of discussions regarding the issuance of an ICC Banking Commission decision. Now, those of you who have been around since the late 1990s will know the ICC has only ever issued 2 decisions in its lifetime. One of those was in 1999 in relation to what was the correct interpretation of Article 20B and C of UCP 500 in relation to original documents, following a decision that was made in a UK court case as to an original document should have the stamp original, ignoring the fact that a document was hand-signed, etc., etc. And that decision was issued. And that decision now forms the basis of UCP 600 Article 17. What is interesting is in a follow-up court case 3 years later, again, an English judge, where a dispute arose between 2 banks over what was an original document, referred to the ICC's decision document, which he, in his own words, stated was a legitimate attempt by the ICC to seek to resolve any ambiguities in or difficulties of interpretation of UCP 500, albeit the policy statement did not vary the provisions of UCP 500, in a field crying out for international consistency. And I think that is where we are today. And that is what we are seeking to achieve through looking at the concept of producing another decision which would put in place or correct how Article 35 should be applied. Now, what should be remembered is that in all of this, and this is part of the discussions that have been going on, is that when UCP 600 was drafted, the wording changed from what had been in the previous 5 versions of UCP. In all the previous versions of or revisions of UCP dating back to UCP Article 82, the very first UCP, those UCPs all had fairly consistent language. And that language was that banks were not responsible for the consequences arising out of delay and or loss in transit of cables or telegrams, letters and or documents. No mention of transmission or sending of documents. And that was right the way through to UCP 500. When UCP 600, and I can vouch for this personally because I was the chair of that drafting group, and I actually went through all my own old notes a couple of weeks ago for the comments. When we drafted Article 35, what we were asked to achieve as part of the overall comments from national committees was that at the time, there was a great feeling that a number of nominated banks and confirming banks were not acting correctly. What was happening was that those nominated banks and confirming banks were claiming reimbursement under the terms of the credit, but were holding on to the documents. They were not sending them. And what they wanted was the UCP 600 to try and correct that position. Now, if you look in Article 7C today of UCP 600, it says, and forwarded the documents to the confirming bank. And forwarded the documents to the issuing bank. In 8C, and forwarded the documents to the confirming bank. And Article 15 was actually incorporated as a brand new article in UCP 600, saying respectively in sub-articles 15B and C, and forward the documents to the issuing bank. And it must forward the documents to the confirming bank or issuing bank. To outline, the banks could not sit on documents. And what transpired out of those changes in 7C, 8C, 15B and C was this slight amendment to Article 35 on the basis that documents should not be sat on, as opposed to something that would not cover this particular event. So what we are looking at is that, in effect, the overall position and effect that is portrayed in Article 35 of UCP 600 has not materially changed since UCP 82. There were valid reasons for the slight change in language in UCP 600 Article 35, and as I've just mentioned, the reasons behind that. And on that basis, what we are looking at is that if we issue a decision, it would outline that the first paragraph of Article 35 also applies in the circumstances where the documents cannot be delivered due to events that are outside the control of the banks, i.e. non-delivery by the courier or postal services, and effectively that the wording hasn't materially altered in its substance and its application since the first version of that article way back in 1933. We believe that consistency of approach and a problem-solving attitude at all levels is necessary to see us through the coming days, weeks, and months. At the end of the day, that's the position that we have, and we will be looking to update everybody as soon as we have moved forward with a position on this decision document.
Okay.
So hopefully that gives you a little bit of a background behind where we are with that. And with that, I'll hand over to Dave. Yes,
please, Dave. So I'm sorry to insist again, but we are already 1 hour, and in principle, we have 15 minutes ahead of us. So we need to hear from Krishnan. So Dave, if you go through scanned document and electronic document questions, and then we will go to Krishnan. Thank you. Dave, we cannot hear you.
Everybody can see the questions on the screen, hopefully.
Okay, great. Yeah.
That's good.
Okay, so for current transactions where goods have already been shipped, such credits would not have been issued subject to UCP. They would already have been issued subject to UCP 600. So it wouldn't actually be appropriate to unwind or amend those credits because the paper documents are already there. So they can't now get hold of electronic documents. The suggested solution in the guidance paper is based on the fact that the original documents are actually lying with the nominated or confirming bank, or maybe with a courier service, or maybe in a country of the issuing bank. Under UCP 600 Article 6, the beneficiaries made a presentation within the expiry date. If that presentation is compliant, the issuing bank must honour. By agreeing to receive scanned fax or email copies of the documents, this allows an issuing bank to complete an examination of those documents as if they were the originals. And the bank can then make its own determination of whether they comply. If they comply, the bank can then honour. If they do not comply, the bank can approach the applicant for a waiver. If documents comply, I mean, this is the same as usual these days. Issuing bank can issue delivery orders or shipping guarantees to get hold of the documents. I think the important thing, and Gary's already alluded to this, that we have to remember is that once courier services resume properly in a few weeks, a few months, whatever it's going to be, there are going to be tons of sets of documents delivered into banks, and our poor document checkers are going to be wiped out. Banks will only have 5 banking days to follow an examination of documents to determine compliance. So if you as banks can arrange for copies to be scanned or faxed in advance, that could help you immensely. And that's for the final question there about the liquidity crunch. Well, there's actually no indication at the moment that banks are not providing similar financing services to those that they were providing pre-COVID. So at the moment, that seems to be good. So very quickly, Olivier, that was that page.
And if we move, yes, to maybe you can keep on going, Dave?
Yeah, electronic documents, recommendation for URDG demand under a demand guarantee may be made by electronic presentation. It does depend on the wording of the guarantee itself. If you look at Article 14 of URDG, if a guarantee indicates a presentation should be made electronically, it should be electronic. If it indicates by paper, it should be paper. Where a guarantee doesn't indicate whether it should be electronic or paper, the default is paper. So if you want to do electronic, you need to make an amendment to the guarantee. On the second question, as an issuing bank, how to control the risk caused by electronic presentation? Is it necessary to change the applicable rules from UCP to EUCP? Well, for any new credits going forward, and wherever feasible, we would strongly recommend you issue your credits subject to EUCP. The EUCP is online on the ICC website. The guidelines on how to use the EUCP are online on the ICC website. Look at those closely. We strongly recommend you use EUCP for the foreseeable future if you can. If the intention is that original paper documents be replaced by electronic documents, then you can certainly amend the credit to be subject to EUCP, but make sure that you can accept the format of any electronic documents. And the final question now, how are banks across the globe looking at adapting to electronic documents and BPOs, given the current situation of restricted movement of physical documents? Well, I haven't got a crystal ball, only time will tell. New transactions that have been issued in the past few weeks will only come to fruition in the next few weeks. So basically we wait and see. But I do recommend that, as Olivier mentioned at the very start, you download the new paper that the ICT Banking Commission have issued today. It will help you immensely in understanding what's going on at the moment. That's it, Olivier.
Okay, thank you very much, Dave. So Gary, with your approval, I would suggest that we go for the questions raised to Krishnan. Krishnan, maybe you can give us your regulatory point of view and maybe following by answers to questions you have received. Thank you.
Sure. Can you hear me? Thank you, Olivier. So good morning, good afternoon, and good evening to all of you. Slightly different tack from what my colleagues have been talking of. I am going to be talking to you about the state support measures, what the regulators and central banks and the accounting bodies have done. Now, why is this important from this guidance perspective? Because what these support measures do is provide liquidity, provide credit flowing into the economy, and this guidance is absolutely critical to maintaining trade finance operations, which then translates into credit flowing in the economy. So what you're doing all adds up and is an important cog in the wheel of the measures being taken to address this pandemic. And a couple of key takeaway points I will address. The first point is, everybody knows from a monetary policy perspective, interest rates have been reduced. Now, you might be seeing in some banks that this does not get translated into higher interest rates. And the main reason is that trade is dollar-backed. At least 50 to 60% of trade is US dollar based. And US dollar liquidities have come under pressure because US dollar swap lines, particularly to banks operating in the emerging markets, EU outside the US, have had difficulties in accessing US dollars, and the cost of US dollars has gone up. What has the Fed done? They have opened up what are called dollar swap lines with 14 central banks. Is that enough? Certainly not. And to address the emerging markets and other countries left out of this, they have also made available repo lines, which enable these central banks to exchange government securities for US dollars. So that's the first thing you will see. With dollar liquidity increasing, you should be able to, it's absolutely critical for trade to keep trade flowing and credit flowing from a liquidity perspective and credit flowing. So all the guidance you are getting here helps you to keep these operations on track. Secondly, you do see government support programs. And just to take as an example, the UK, where you've seen loans being given to large businesses, micro and small and medium enterprises, and other smaller entities. The same has happened in the European Union. The same has happened in the US. Importantly here, from a trade perspective, many of these loans are intermediated through the banks, and the government gives an 80% guarantee. And this is critical because if you look at banks, would they like to give an overdraft? No. they would want to give it in the form of invoice financing or trade related products. So once again, this is critical because when you get a government guarantee, and I'll come back to it from a default or capital perspective, very clear guidelines by the EBA, by the PRA, that when you have a guarantee, then the capital which you set aside for these exposures are equivalent to government guarantees. Yes, you may say, but aren't government finances under pressure? Certainly is. Ratings may come down, but they're still better. And from a capital perspective, clearly helpful from a bank perspective to keep credit lines and liquidity flowing and financing for the real economy. There is the question, the government and the central banks have also said there can be payment holidays or moratoriums. I will come back to that shortly. What are the other measures the central banks are taking? The central banks have also relaxed capital rules. They've flexed countercyclical capital buffers. The PRA has reduced the countercyclical capital buffer in the UK from 1% to 0. What does that mean? 23 billion of capital released, which can translate into 200 billion of increased lending. Similarly, if you look at they've said the liquidity coverage ratio, which is supposed to be greater than 100%, and since many banks are operating at greater than 100%, these buffers can be run down with the view of making credit available to end users. And once again, it can go below 100%, but very clear direction in terms of this. What is the other thing from a trade perspective that the regulators have done? Both in the EU and in the US and in UK, the regulators have amended the rules to allow multilateral institutions or export credit agencies to provide credit insurance for short-term trade finance. So it's something which most banks can use, because you take Germany as an example, they have targeted a 30 billion fund available either as direct insurance or reinsurance for ECAs to support short-term trade-related exposures. And coming back to moratoriums and the issue of if you have a 90-day default, because this is important from a trade finance perspective, clear guidelines from all regulators that a moratorium, a deferment of payment, is not equivalent to a default. And because it's not equivalent to a default, you don't need to have increased provisions. So that is another plus. And particularly because they've said, if you look at the expected credit losses under the accounting guidelines, if there is a mass of downgrades, it's likely to result in provisionings going up. But they have been very clear to say that these moratoriums do not constitute a default, and therefore it's fine. So in terms of three key takeaways: dollar liquidity, capital being made available, and a moratorium being treated not as defaulted loans. With that, should I go to the questions, Olivier?
Yes, maybe you can go a little bit quickly on that.
Oh, because sure. There's just two questions.
Yes.
Was raised. The first question was, how can trade finance remain active in the face of this pandemic? And as I said, it's critical to keep trade finance going, credit flowing. And this guidance is all about making sure that you find ways to ensure that that keeps flowing. And it's got to be, you need to be talking with each other, and to say simply, you need to address two questions: what is in my control, what is not in my control. And if what is not in your control, then there is the additional question of what you can do to bring this under control. In terms of the second question, can banks add confirmation to LCs during these times? Yes, you can. Yes, as far as we are aware, confirmations are being added, subject to internal policies and facility requirements, which is again a credit decision. And the last question is how to protect an exporter when the importer refuses to pay proceeds due to the pandemic. As we say, that as with all other times, when there is a crisis, speak to the parties concerned, seek a bank undertaking, banks as a way of protecting yourself. Thank you, Olivier.
Thank you to you, Krishnan. It was very interesting to have the regulatory aspect also. So coming back to you, Gary, there were also a few questions about alternative solutions. For the sake of time, I will really ask you to be very synthetic on your approach.
I will definitely do yes and no. Maybe. Okay. Will the pandemic lead to more use? I think one would hope so. Certainly, I think we would see an upturn even before COVID came around at the end of last year, January this year, that there was an increased interest and an increased usage. So I think this will act as should act as a catalyst going forward. When document presentation is not available, what could the beneficiary nominated bank do? Well, that's really the basis of the scenarios that we've painted in the actual guidance paper. What I'd like to add to this is that in a few of the questions which have come up while the other speakers have been talking, there's been a few questions on sort of, how can you manage scanned or imaged documents, and what is the purpose? I think you have to look at this two ways. One, there is the ability for banks to, if, say, for example, the shipment is by air, you don't need the original airway bill to take control of the actual goods themselves. If the bank is satisfied that the copies comply with the terms and conditions of the LC, that the originals are still with the courier company or the nominated bank, the issuing bank could take the decision to pay if the documents are complying and to issue a delivery order to the airline or to their agent. Similarly, they could issue a shipping guarantee to the carrier, knowing that the original bills of lading are not lost. They're actually still held in or with the courier or with a nominated bank. So there are ways and means around this. One thing that was interesting in all of this is that, we've talked about how banks should be, and particular issuing banks should be a little bit more proactive, maybe, certainly in the earlier stages of the pandemic. It was interesting that earlier this week, there was I got a news alert from a paper called the Business Standard in New Delhi. And a company had actually written to the newspaper asking them for advice of how they should do a trade finance transaction, rather than go to their bank. Whereas the bank should be more proactive. And actually what the newspaper offered was a fairly sound piece of advice. Have an LC that calls for a non-negotiable seaway bill. You don't need the original bill of lading. So there are things that are being done out there in relation to how transactions can be handled. And as I said during my session, it's time now to think out of the box and think a little bit wider. Last question on this slide, and this is really, I think, centered around the 5 banking and business days. As I mentioned, this is the next big issue, and you should not be turning a blind eye to what's going to happen in the days and weeks ahead, because those documents that are locked up somewhere are suddenly going to arrive on your doorstep. And in a way, having faxed, scanned, or emailed documents sent to you can actually spread the examination of those documents, that you're not doing them all in one go and all within that 5 working day or banking day kind of environment. Next, there are some SBLCs that require the original. Well, if that is part of the actual documentation required to draw, unfortunately, you're stuck with that condition and you would have to get it amended or changed, or hope that the bank would change their mind and would not insist upon the original SBLC being presented. What should trade finance community implement to ensure minimal disruptions? Talking. Talking amongst yourselves, talking in each transaction, finding an alternate solution. Staying silent and doing nothing are no longer options. This has got to be a dialogue. Who in global trade will be affected? Everybody. I don't think of anybody that's not going to be not affected. And lastly, issues relating to late presentation, late shipment, or else expired because some documents cannot be issued. As I said at the outset of my session, unfortunately, this is outside the scope of the rules. This is in the hands of the beneficiary, and the beneficiary either has to get amendments to sort the issue. And I've spoken to a number of beneficiaries recently, and a lot of applicants are very willing to consider allowing for faxed, emailed, and scanned documents to be sent, providing the nominated bank certify that they are holding the originals. So it is working. It's just a question of getting that message out and getting that dialogue talking between beneficiary and applicant and issuing bank, and certainly between all of the banks that are concerned. There you go, Olivier. I'm done.
Yeah, thank you very much, Gary, to have been so synthetic. So unfortunately, time has run very, very fast, and thank you to the panelists for their excellent and very clear presentations on all the topics. So unfortunately, we have not been able to cover everything. I saw in the chat many questions, and as it was explained, the documents that we have released are living documents. So it means that we will try to update them on a regular basis. Maybe we will have to think also in a Q&A system, allowing the audience and more broadly the banking industry to raise some specific questions on which the group of experts will be able to provide some good answers. So of course we will let you know, we will inform you on the way we will move forward in that respect. Maybe if we still have 5 minutes, maybe there was maybe one or two questions that we could raise about, and one of them is I don't know who would like to take this one. It's relating to correspondent banking, because it is said that of course the situation of correspondent banking is still very difficult due to the level of risk. Is there, in your view, any solution in that respect to improve and to increase the level of correspondent banking capacity in the world today due to this pandemic situation? But maybe not only due to this pandemic situation, by the way. So maybe it's a question for you, Krishnan. I don't know what you think.
Well, since you put me on the spot, I'll take it. You know, Olivier, we've been, there's a lot of work being done by the WTO, and we've been talking, this is in compliance and risk issue, which has been addressed. But also it's a fact that, the banks have, most of the banks who have already, what can I say, have had to rely on complying with the internal regulations, have actually taken steps to cut down on some of the relationships. Now, clearly, this is a policy issue which is at the highest level, has got attention from regulators and policymakers. But I'm going to be very frank here. The regulators keep saying that they don't put pressure on banks. But the fact remains that if a bank is open to and is, caught out in, if they don't comply, then they're put in a tough spot. And the fact of the matter is there's a cost issue also to do the actual relationship and to look at this. It is fairly costly. So there are no, what can I say, ready-made solutions. But the point being made that today there is a crisis situation and something should be done is absolutely accepted. And this is where I think the multilateral institutions, as I referred to the export credit insurance, can play a role by possibly adding, and we've seen the African Export-Import Bank come into play, or the Afro-Exim Bank starting a utility to help the African banks in terms of addressing these correspondent banking issues. So that's one step. Possibly allowing the multilaterals, like I've talked about, the governments giving 80% guarantee when they give these loan schemes. To increase this, you could get the multilaterals to play a big role in actually expanding this. So there is a solution, but it requires, the government the institutions, including the multilateral institutions, to come to the table to address some of these issues.
Yeah, sure. Yeah, thank you, Krishnan. And maybe one last question. We all appreciate that digitalization of trade finance will be maybe one of the solutions that will have to be put in force quite rapidly now, as we see that might be a good solution. So we are working on the URDTT. And maybe a question for you, Dave, to close this panel today. When will it be available for the market?
Very good question. As soon as possible, but very quick answer.
Yeah.
We only released draft 1 in September. We had 700 plus responses received by November, the deadline. We released draft 2 earlier this year. The deadline for responses was the start of this month. We received again about 250 responses, which is wonderful. We are currently working on draft 3. We've had a couple of calls already. Gary and I will be involved in a couple of 3 working group meetings next month for the rest of the drafting team. We would hope to get draft 3 out sometime in June.
Okay,
it's pretty quick. That's 3 drafts already in just a few months. When will it be finished? The answer simply is when we see what the responses are to draft 3. As long as we can get draft 3 as close to possible completion as possible, and we get under 100 comments on that, then I think we're very close to getting it done. So draft 3 in June. Finalization this year would be great, but I'm not going to commit to that just yet.
Okay, thank you very much, Dave. So I think it's time to close this panel for today. Thank you one more time very much to all panelists for their clear explanation. Thank you to the audience to have maintained your attention during an extra 15 minutes compared to the initial timeline. So one more time, don't hesitate to go on the ICC website to download the different documents we have mentioned, and we will inform you on a regular basis on the way we will update those documents and to organize, as we were saying, a Q&A tool allowing you to raise your question, to witness on a particular situation you are facing on a day-to-day basis in the market, and we will try to do our best to provide you with the good answers. Okay, thank you very much. So maybe Thomas, I leave this to you to close the session for today. Thank you very much.
Thank you, Olivier. Thank you again for all the speakers for your time and for the audience participation. So as a reminder, we are hosting live broadcasts on this topic in addition to other trade topics like the Incoterms rules, cryptocurrency, leadership coaching, and others. So we urge everyone to sign up on our website for free and subscribe to our YouTube channel. And ladies and gentlemen, this has been another episode of the COVID-19 Briefing. See you next time.